A very warm welcome to IDFC First Bank Presents Leaders of Tomorrow Season 14. I'm Ritwika Gupta. As global economic fault lines deepen and uncertainty reshapes trade, energy and growth outlooks, we turn to one of India's leading policy voices for perspective. Tonight, I will be in conversation with Krishnamurthy Subramanian, economist and former chief economic advisor to the Government of India, on India's economic resilience amid rising geopolitical tensions and global fragmentation. Mr. Krishnamurthy, welcome to Leaders of Tomorrow, and thank you so much for joining us today.
My pleasure, Ritwika.
So firstly, congratulations on becoming the first Indian economist to receive the Distinguished Alumni Award from the University of Chicago, placing you alongside Nobel Prize winners and some of the world's most influential thinkers. How does it feel personally, and as someone who has spent years shaping economic thinking and policy, how do you reflect on your journey today?
To be recognized for work done in India and for India is genuinely humbling, and I would say, in fact, for young economists, I would say there is an important aspect that they can look into, that work that is of scholarly rigor that is done from India can have global relevance. That's the inspiration that I would take for myself and hopefully for young aspiring economists as well based in India.
Well, congratulations again, and I want to start by zooming out to the global macro picture. With escalating geopolitical tensions around key maritime routes like the Strait of Hormuz, how do you assess the medium-term impact on the broader economy, especially energy, security, inflation and trade flows?
If we take GDP as the combination of consumption plus investment plus government spending plus net exports, consumption accounts for close to 60% of our GDP. Investment, of which bulk is domestic, accounts for over 30%. And government spending accounts for about 100%. The remaining, which is residual net exports, that's exports minus imports, accounts for -2, -3%. So I think the key point to remember is that our ability to withstand this crisis depends critically on the way in which we respond domestically. I think that's the key point. Ever since COVID, there have been a series of crises. I think that seems to be an aspect that is here to stay. So India needs to really double down on reforms, especially on the supply side, because that will make sure that we are expanding, our GDP at a good pace. 8% is our potential, as I've said repeatedly, and that will also help in bringing down inflation in the medium term. Short-term measures, of course, and I think some have already been taken, but they need to focus on the supply side, ensuring that some of the, the balance sheet pain is taken by the center plus the states. These will ensure that the risks are not passed on to the most vulnerable, which is the citizens of the country.
So extending that thought a bit further, Mr. Krishnamurthy, do you see the current phase of global fragmentation as a temporary disruption or a long-term shift to higher costs of trade and capital? And how exposed is India today?
If you were to look from 2000 onwards till about, let's say, 2020, for about 20-25 years, the global economy was primarily minimizing costs. Going forward in the next 25-30 years, I would say the mantra would be to minimize stress. What do I mean by that? That given a very, very crisis-prone global economy, resilience becomes really critical, and therefore, instead of minimizing costs, which is what the metaphor was, for global business previously, now it is going to be about minimizing stress.
Sure.
And economies that will respond the best during negative shocks, negative global shocks, will be the ones that will do well. And here's where I think India's domestic capacity really comes into picture. And just for inspiration, I would like to point out two key examples, ones that I draw myself on as a policy maker. Take Japan and China over 25-year periods. Japan from 1970 to 1995 grew its GDP in dollar terms by 25.6 times, from about $220 billion to close to $5.5 trillion. Similarly, China from 2000 to 2025 grew its GDP close to 20 times. I think these give very important lessons that if we focus on domestic measures, accelerate reforms in particular, then we can actually withstand these crises. And I think the important message that India must convey to the rest of the world is that India is the one nation that can really provide stability at scale. I put out a tweet which has gone viral where I've highlighted 3 facts that India must highlight to the world. We are one country which has never gone on in an aggressive mode militarily ever. We've never defaulted on our obligations even in 1991. And third, when COVID struck, we basically took everybody together. Our vaccine Maitri, for instance. That is the way India thinks, and I think this is therefore really makes India a very good economy to actually provide the de-stressing that the world needs and the resilience. So that's a message that we must convey, and our companies themselves should respond to this big change that has happened from cost minimization to stress minimization.
So in that scenario, how should Indian businesses, especially MSMEs, rethink their supply chains and cost structures to better handle geopolitical shocks?
The 7 crore odd MSMEs that account for significant job creation in the country. So given that their importance is significant, a couple of aspects that must be focused on here is that our MSMEs need to also account for the fact that stress and crisis situations, uncertainty in general is here to stay. So from just-in-time manufacturing, they need to be focusing on just-in-case manufacturing. In other words, they need to actually ensure that there is diversification across the supply chain. They cannot depend only on one supplier. Also, they need to be focusing on not just the immediate supplier, but the second-tier, third-tier supplier as well, and manage risks there so that there is no cascading of risks. Sure. These are important aspects to change from. Now, second, it is really important that our MSMEs focus on productivity enhancement. And here I would like to bring to attention, for the benefit of all our MSMEs, some very good research that's been done at Stanford University by Professor Nick Bloom and others, who show that if you look at enhancing HR practices, inventory and accounts receivable management, quality control and production plan control, these increase productivity by about 20% in just the very first year. And just see some simple things can actually enhance productivity significantly. What it does is when MSMEs become more productive, they're actually less prone to shocks, because if they are at the margin, they're actually a lot more prone to shocks. The third aspect that I would mention is for our MSMEs to scale up significantly. This is something that I was saying when I was in government as well, because scale is what reduces their costs through the economies of scale by spreading their fixed costs.
Right.
And finally, this is an aspect that I think policymakers really need to focus on, which is on ease of doing business and ease of financing, both of which are really critical for MSMEs. On the ease of financing, a recent 2025 SIDBI report shows that with respect to debt financing, our MSMEs require about 25 lakh crore of debt capital. Similarly, if you look at equity capital, our MSMEs require about 30 lakh crore of equity capital. So both debt financing and equity financing, both of these, and there are several policy choices that can be implemented by the financing regulators together working with the Department of MSME to ensure that these financings are taken care of. At the same time, also ease of doing business is really critical from the policy side to really strengthen the MSME ecosystem in the country and thereby enhance the contribution that they make to the economy.
So zooming in further on India's MSME ecosystem, now India's MSMEs form the backbone of India's exports, yet continue to remain highly exposed to external shocks, with limited access to timely and affordable capital and credit being a persistent constraint. In the Union Budget 2026, the government announced a 10,000 crore SME growth fund. But how far does this really translate on ground in terms of improving access to finance, enabling scale and making MSMEs more resilient to volatility?
the amount of capital, both on the debt capital and equity capital that is required by MSMEs is actually a huge, multiple of this, as 25 lakh crore on the debt capital side, 30 lakh crore on the equity capital side. And here's where the digital public infrastructure that India has created, together with the GST database, the account aggregator, the portals that have been created by the Shram portal, for instance,
sure.
And these can really be brought together along with what AI provides today. In my opinion, there needs to be an MSME AI stack that needs to be created, by the Department of MSME. There should be a MSME Maitri, or a app that must be created in vernacular language to enable them to enhance the productivity improvements, to access capital. As I said, by using the combination of GST, the CREDS portal, for instance, even the GEM portal, and the digital public infrastructure, credit access actually and even equity access can be really enhanced. That is something that will really help our MSMEs to build up scale.
Definitely.
And scale is a really critical factor for them to actually become less vulnerable, as is enhancement in their productivity. So these are aspects that really need to be focused on. And I think if you look globally as well, whether it's Germany, whether it's the United States, the amount of incentives actually, especially and making business easier and financing easier that is done for MSMEs, I think that we can pick up a leaf or two from what is done for MSMEs across the globe to really enhance their productivity and access to financing to make them less vulnerable.
Now, manufacturing has been positioned as the next big growth engine for India. But when we look at global competition, what do you think will it realistically take for India to move from assembly-led growth to high-value manufacturing?
If you look at the middle class that we have, and the summer that we are going through, for instance, almost every family wants to have an air conditioner, for instance. Now, if India is not manufacturing these air conditioners, from scratch, let's say up to finish, then we will have to import these air conditioners. Similarly, cold water from a refrigerator is also something that has become really critical. Now, if we don't have manufacturing of these, then it will mean basically, crucial foreign exchange getting expended in importing them. This just highlights why manufacturing is an aspect that I've been emphasizing repeatedly, even when I was in government, that apart from, manufacturing being the source of job creation, even to make sure that our external sector remains stable, we don't have to actually enforce import curbs on air conditioners or refrigerators, etc. When there is a crisis, we need to really build the domestic manufacturing base. That is a sine qua non. And here I actually must distinguish between what is necessary and what is sufficient. I think on the necessary side, I've said this, and we've covered this in the economic surveys that I had the privilege of writing as well. If you take manufacturing, there are 5 critical inputs that a manufacturing sector firm uses. There's land, there's labor, there's capital, there is ease of doing business that they use, and scale. Each one of them reduces the costs for a manufacturing firm. If land is costly, then that adds to the cost for manufacturing firm. If labor is costly, that adds as well. Similarly, if doing business is costly, that adds to it. If they don't have the optimal scale, that adds to it as well, and financing. Now, put all these costs together and suppose 10 to 20% higher costs that a manufacturing sector firm pays in India compared to its global counterpart. When you put all of these together, we're looking at anywhere between 70 to 80% at a minimum higher costs, and that is what makes Indian manufacturing not as competitive. So, this is something that has been mentioned. It is necessary. We have to ensure that the reforms on each one of these areas happen so that manufacturing becomes really competitive. And as I said, actually, if we do not build up the manufacturing base with a growing middle class, let's say a $30-35 trillion economy in 2047, think about the number of refrigerators and all other manufacturing goods that will have to be imported, and the foreign exchange bill that will have to be paid. if we have to actually allow these imports. So manufacturing sector, growth is a sine qua non, and these 5 areas, what we economists call factor inputs, reforms on that are absolutely critical. That said, what makes it sufficient is actually till we ensure that all these are competitive, the PLI scheme needs to be focused on ensuring that it is given for manufacturing. When we had conceptualized it, when I was part of government, we thought about it as a bridge from the current situation for the costs in manufacturing to actually the optimal level. And that bridge needs to be focused, therefore, on manufacturing. I think this is what will make sure that we actually become a manufacturing powerhouse. There is no escaping. We have to do that. There are a lot of economists who say, we need to be focusing on services. But I hope, we're able to see how the curbs on air conditioners and refrigerators, etc., is highlighting the need for domestic manufacturing to ensure that we supply these items to our middle class. I think that is something that is, there is no way we can sort of avoid, manufacturing sector growth. Last point on, assembling, I think it is really important to understand that no kid learns to run without having learned to walk, and therefore assembly actually is something that we have to do. We have to increase the proportion of value added, but if we say immediately we will have to do value added manufacturing, that is something that is not going to happen overnight. But we have to phase out the assembly and phase in a lot more of the high skilled manufacturing by taking all these steps.
Now, alongside manufacturing, technology is clearly the other big force here. As India tries to position itself in the global digital economy, do you see AI as a true productivity multiplier for sectors like manufacturing and services?
If we look at the business models and the economic models that have been employed by the advanced economies, they've been typically tailored to a labor-scarce economy. And that is why technology has been thought about in the advanced world as a substitute for capital. Now, when it comes to India, we have to actually go to first principles and adapt our economic model and our business model to the fact that we are a labor surplus economy. So we cannot be thinking about technology in general or AI in particular as well as one that substitutes capital. I think here's where our policymakers and our industry folks have to really come together to understand and really assimilate this message that I'm trying to reach out to them, that AI has to be thought about as one that supports labor, not one that displaces labor. Because, as an erstwhile policymaker that actually cares for India, if you were to wake me up at 3 o'clock in the morning and say, what is it that, keeps you awake about India? I would say jobs, jobs, and jobs. So AI has to be really one that enables labor, and so we have to think about AI as one that actually can enhance productivity. And there are so many ways this can be done, because right from just actually enabling an employee to really portray what is the productivity that is doing, so that the supervisor actually can see the true worth that he's bringing at work. AI can really enable that, to be able to distinguish those that are actually working very hard, delivering bang for their salaries buck, versus others actually AI tools can really enable. So in general, if we think about AI as one that actually makes our laborers more productive, our employees more productive, that is something that will really help India, in using AI in a productive way at the macroeconomic level. Otherwise, I think there is a problem that all of us have to acknowledge, which we economists call the free rider problem. If every firm looks to actually substitute labor with capital, then when you aggregate across all of these firms, we will have a simultaneous substitution of labor with capital, which is fine for a Germany, that's fine for a United States, but that is not fine for India, given how labor surplus we are. So we really have to think about both CII, FICCI, these industry organizations together with academia have to come together to make sure that AI is labor surplus, is labor supportive, not labor displacing.
So, Mr. Krishnamurthy, the theme for our show this season is Emerging Businesses, the India Advantage. If you step back and look at India's overall economic position today, what macroeconomic advantages does India genuinely possess in an unstable global economy? And how do you interpret the India Advantage today?
There is a lot of noise that comes out, and especially during crisis periods. I've been a firm believer in the credo that for anything positive to happen, credible positive thinking is necessary. For anything negative to happen, even flimsy pessimism suffices. So it is important amidst this noise to focus on credible optimism, credible positive thinking. And there is a lot that India has to offer. First, in the next 20-25 years, India is the only large economy that can offer growth of 6.5-7% plus consistently. And therefore, the opportunity for foreign investors to, even in dollar terms, and I've actually written about this, to double their their money every 7, 8 or 10 years at the maximum. So that growth engine, I think that is something that is number one. Second, and this is something that we spoke about before, that India also actually offers in a global situation which has moved from cost minimization to stress minimization or resilience maximization. India really offers a large, stable economy for investors to come in and invest. That's a second big competitive advantage. Third, and I think this is where India's strength as a large economy that has, large number of abundant labor. So if, for instance, think about a foreign investor that goes into a country like Thailand or an equivalent or a Vietnam, very quickly their wages will go up, maybe in a few years. But in India, that will not be the case, because even if, let's say, wages move up in a Mumbai or in a Delhi or, let's say, Hyderabad or Bangalore, there are the Kasipets, there are the Warangals, there are the Tiruchurs, the Muzaffarpurs and the Patnas, etc., where actually, businesses can move to tier 2, tier 3 cities where there is still enough, abundant labor to actually pick up. So this kind of scale is something that is really important. I think the messaging that seems to come oftentimes, especially during, times of crisis, it is as if that India is at the mercy of the world. But as I said, actually, given the fact that almost 98-99% of our GDP comes from domestic factors, India's growth is a big contributor to the global economy, and even the International Monetary Fund has acknowledged that. So in some ways, actually, the world economy is at the mercy of India's growth, and this is something that we must acknowledge and act in a similar manner. And at the same time, I'm not suggesting complacence. I'm asking for us to recognize our strengths, at the same time do reforms. And I'll emphasize this again and again, that growth is what ensures that capital stays and comes into India. So the emphasis has to be on growth. Our target has to be 8% growth. If you are not delivering 8% growth, which we certainly can by doing reforms, then I think we're actually leaving some money on the table, which would not be something that would be very desirable.
And finally, bringing this full circle as we wrap up this conversation, what is that one piece of advice you'd have for Indian businesses navigating today's geopolitical uncertainty?
I think the first piece of advice I would give them is to focus on productivity. And this is primarily catered towards the small and medium firms. We spoke about some of the simple measures that enhance productivity by 20-odd%. And when you become more productive, you are less vulnerable, because this period of global economic shocks is here to stay. Drawing from that, I would say, instead of just-in-time manufacturing, they must be focusing on just-in-case manufacturing or just-in-case business itself. That's the second. Third, focus on scale, because scale provides you, lower costs and thereby makes you more competitive. And finally, make sure that you appeal to the policymakers to focus on enhancing ease of doing business and ease of financing. Scale will come when you're able to actually attract equity capital and debt capital, both of which you need to be tapping into to ensure that you become more productive, thereby, do good for yourself and in the process do good for the country as well.
Well, it was a pleasure chatting with you today. Thank you so much for joining us.
My pleasure, Ritwika.
And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 14. We hope you enjoyed the conversation. Thank you for watching. Goodbye.